And hello, everybody. Welcome to the SomEThing podcast once again. Kind of a special edition this morning. No news to report because we're going to be back tomorrow with another SomEThing podcast with Declan. But today we've got a couple of special guests, both named Joseph. We can go ahead and bring them out. We've got Joseph Lubin, of course, the co-founder of Ethereum, CEO of Consensus, and chair of Sharplink Gaming. And we've also got, speaking of Sharplink Gaming, we've got Joseph Shalom, co-CEO at Sharplink. And we welcome, gentlemen. Thank you. We've got two Josephs, zero Technicolor Dreamcoats, but maybe that'll change at some point. Welcome
And
to
we have
both of you.
a Joseph in the back room just in case any of us get injured out here.
Yeah. Right. Yeah, we do. We have a third alternate Joseph, just in case he's needed. Well, I've gathered you both here today basically to follow on to the exciting announcement that we had last week that Sharplink is committed to put $200 million worth of capital onto Linea. And this is kind of a great demonstration of Ethereum at its best, because we've got a lot of big names in the Ethereum ecosystem involved in this. Obviously, Sharplink, Consensus, Ether.fi, the EigenCloud folks. You've got Anchorage, all working in the background. So very exciting stuff, and congratulations to both of you on the announcement. And I guess I just want to start with Joseph Shalom. Given all that and what we've just run through, what is it that the Ethereum ecosystem and Linea are offering to institutional investors that's really resonating and makes an announcement like this so exciting?
Sure. First, it's worth just sharing. Sharplink is a digital asset treasury. We're actually the second largest corporate holder of ETH. And we have two missions. One is to accumulate and stake that ETH and make it super productive for our investors. And the second is to, frankly, be one of the loudest advocates for the Ethereum ecosystem. Because if you have a strategy of long-term investment in ETH, you really need to be loud and focused and intentional on what you're trying to do to benefit the ecosystem and to play a really benevolent role. And if you take a step back, as a treasury, our first responsibility is to not lose the king's gold. So risk management is really important. But the most important thing is that ETH is a productive asset. And our goal through our treasury is to make it even more productive. So this announcement, which I think is groundbreaking, between Consensus, Linea, Sharplink, EtherFi, and Eigen, I think is just an absolute first step to setting a new benchmark on how institutions like ourselves can get involved and engage in Ethereum-based finance. And I think you could think of it as just the first step in what's going to be a broader collaboration with both Consensus and Linea. And what we're basically trying to achieve is institutional grade yield, but in a way that's fully composable and uses primitives that allow us to do this in DeFi and with partners. So there's a lot to unpack there, but the basic premise is we can do a better job generating liquid staking yield through this partnership than an investor could do on their own. And it's through this collaboration. So if I'm not coming across as excited, I am incredibly excited, because we are going to raise the standards and raise the bar and really help this ecosystem. And Linea is going to be one of our best partners in this regard.
Let me just pause real quick on one phrase there that we hear a lot and we use a lot. Institutional grade. So what does institutional grade mean in DeFi to you today?
Sure. I think Joe can speak a little bit about what Vitalik's view of DeFi is, because it's been evolving. But from our perspective, when I look back, a lot of the yield people were seeking in DeFi was just kind of get as much return as possible. But institutional DeFi is understanding the other side, which is the risks associated with DeFi. And the idea that there are lots of potential risks that need to be mitigated, including potentially protocol risk, smart contract risk, bridging risk, liquidity risk, depegging risk. But if you can hire really amazing people who can do their diligence, who can do a great job working with Consensus and Linea, you can find the best protocols to give you that additional yield without necessarily exposing yourself to the traditional DeFi level risk. And that is what I would call institutional grade DeFi, where you've done the diligence, you've mitigated your risks, you really understand it in advance, and you're not seeking the highest level of return, you're seeking the highest risk level of return. And that's how institutions who look after for investors should be thinking about the return profile, which is risk adjusted.
Yeah, for a number of months, Vitalik has been making some pretty profound statements about the evolution and maturing of DeFi. He's been specifically talking about it in the context of retail or more naive users, where he is a person of great integrity, integrity over business development, and he's always been careful to err on the side of caution and conservatism um, when recommending usage of the Ethereum technology. It's been over 10 years, and we've been working to scale and harden the technology while making it more and more useful. And it was remarkable when a few months ago he started talking publicly, and more recently he wrote a blog post indicating that, hey, in his estimation, low risk DeFi is open for business and should be looked at and considered, studied, understood by all of the users in the world, all of the consumers in the world, because he believes now, and he's done some data science calculations, etc., to back up his thinking. He believes now that it is just as safe to put your capital into low risk DeFi protocols as it is to put it into more traditional instruments to earn yield. And so that low risk DeFi for a retail user is a bit different from low risk DeFi for an institutional user, because there are things that we can do with greater sophistication to grow our yield and expand what we would consider to be low risk. But we can monitor things and make sure that we're working with the best and brightest people and the best protocols to achieve that excellent risk adjusted yield. But really, it's a new world at this point. We are going mainstream quite rapidly. Vitalik made the announcement.
One thing that's going on in the background on Linea that I'm not sure most people know about that contributes to, offering that institutional grade performance and risk management is, I'm told that Besu is, kind of the standout institutional grade Ethereum client. Joe, can you talk a little bit more about why that is?
Yeah, Besu, Japanese word for base or foundation, and it's a very old story with a lot of color to it, and so I'll try to hit the high points. But going all the way back to the early days of Ethereum, there were three main Ethereum clients: the Python client, the Go client, and the C++ client. Um, uh, Parity, the organization that built the C++ client, moved away from that, and they started building their Parity client, and it got kind of complicated about whether Parity was going to continue to properly support the Ethereum ecosystem and the Ethereum technology, or pay much more attention to their own Polkadot ecosystem. And so Consensus very early had built a Haskell client, and we'd funded the building of a Java client, and those things got out of date. And so we were facing a situation where we might not have more than one really solid client in the Ethereum ecosystem. And our strength has been that we always wrote specifications, and we always had multiple clients that were constantly checking each other every few seconds, every 12 seconds, depending on where we were in the evolution of the ecosystem. But it's an incredibly powerful, redundant way to keep the protocol running nonstop, 100% uptime for over 10 years. And so I had a discussion with Vitalik, and I suggested, or he suggested, that Consensus get busy building another client, and we put a team together to do that. Brought some great protocol engineers. We already had a bunch already. And the decision was explicitly made that, hey, we should go for an institutional grade Ethereum client, so that enterprise blockchain could be something that is more comfortable for more kinds of enterprises. And so we made the choice of Java as the language, and we've been able to make sure that our client has been quite performant. I've done a lot of work on that. And we made the decision after building it, operating it for a few years, that to gain even more enterprise engagement, both in terms of using it, in terms of adopting it for your project, in terms of contributing to the core code base, that we should contribute it to the Linux Foundation. So we contributed the code base to the Linux Foundation, and we continue to be the main maintainers of the code. And we've been fortunate to see many high quality projects also contribute to the extension and the maintenance of the code base. So fast forward, enterprise blockchain had its day. Enterprise blockchain is dead. Long live enterprise blockchain. And that actually means that the old IBM Hyperledger Fabric has seen better days. It waned quite significantly in utilization, and it was really the public permissionless nature of the Ethereum protocol, the maturation of the protocol in the ecosystem, and significantly the availability of Besu in the Linux Foundation context that helped enterprise blockchain start to be synonymous with Ethereum Besu effectively. And so we've seen a lot of great projects around the world adopt Besu, from Dfinity and Adhara, in a more institutional money kind of context, global institutional money, to the DTCC, which uses it, to NASDAQ, which is using it. So we are, Besu is a tremendous foundation for enterprise blockchain all over the world, and especially for the new kind of enterprise blockchain, which is layer 2 rollups, ZK EVM rollups on Ethereum in the form of our own Linea.
So it sounds like it's another kind of level of alignment that I don't really think people are aware of. We talked about Linea being Ethereum aligned, but then there's also this level of alignment with Besu where it's kind of enterprise aligned as well. And I love that technical history. I think maybe one day we're gonna have to get a lot more into that technical history. And we'll probably be talking about
just sold the
about.
movie rights to the Besu story. Just joke.
Oh, good.
Just
yeah, somebody should write a book. We need to talk about Besu
you and
the
I
way
should
we
write
talk
a book
about
on Besu.
that garage.
Exactly.
Yeah. Yes, I would like to. It should be as well known as a certain garage in Palo Alto. So bringing it back to Sharplink, so the way I understand it is the formula for why this makes sense is you can actually distill it down pretty simply. You've got the security of Ethereum, plus Besu, plus the speed and cost and savings of running on an L2, and the fast finality of ZK as well, and that recipe will point you pretty exclusively to Linea. Is that kind of the basic logic? And that's for either.
Yeah, it is. I mean, if you take a step back, we have a big ETH balance sheet. Most of it is in native staking, but the interesting thing of what we were trying to accomplish is really two things. One is the idea that restaking Ether can transform it from what's a really productive but static yield-bearing asset into something that's more of a dynamic liquidity instrument. You can do more than just hold and stake. But the second part was really, really important, and it touches on what you were just getting at. Linea is not only a ZK EVM, it's 100% code compliant with mainnet. And the idea was for us to set a precedent that you could access programmable yield while at the same time completely reinforcing Ethereum's core security model. So you can think of it as we're getting yield, but it's with a purpose. And the purpose is to prove that you can support a decentralized infrastructure and you can do it at the same time in an institutional manner. And I think what's unique, besides Linea's lineage, so to speak, and the fact that we partnered with both Consensus and EtherFi and EigenLayer, is a really important idea that you can do all of this with a Linea integration with a qualified custodian. So when Joe talks about good DeFi, this is great DeFi because I can have the security and the regulatory clarity that I can get this excess yield for my investors through the Linea partnership, but I can keep the safety and security of, in this case, an Anchorage qualified custodian. So you are taking something that's productive but static and making it dynamic. You're doing it through a programmable, decentralized, institutional level infrastructure, which is Linea with Besu, and you're getting the benefit of protecting your investors by keeping it in a qualified custodian. This is what's groundbreaking. And it was very intentional that we did it with Linea, and we did it with Linea first to send a message to the ecosystem that you don't have to compromise either on DeFi yield or institutional protection, and you can get it within this integrated wrapper of Linea on a qualified custodian. I think that is a really important standard to set for the industry.
Yeah, in terms of reducing your risk, because the best and the brightest decentralized finance professionals are taking care of you, and the American financial system, securities law system, best in the world, is keeping everybody honest and at their best. And the fact that we are able to choose the best risk-adjusted yield, even under those enhanced security conditions, it is a tremendous innovation that we're able to bring that to retail and institutional users, rather than the DeFi degen people who probably can't even achieve what we're able to do with the might that we've put behind SBET. And a little bit more history. So sort of approaching another side of your question. Years ago, when the roll-up centric roadmap was proposed and agreed upon, a few projects came out fast with the optimistic approach, and that suffered mostly from the fact that fraud proofs would take many days to adjudicate and ultimately settle and finalize. And we made our bet at Consensus on ZK technology, zero knowledge proof technology, and we thought it would take a long time. It ended up that humans are really smart, and when they're motivated, they can move fast and make astonishing breakthroughs. So pretty quickly, we were able to get to a point where the head researchers came to us and said, hey, we think we can build a roll-up from this technology. And so we put our heads down, moved fast, moved in that direction, and it became clear to us early on that ZK proof technology was going to change absolutely everything. So not just the layer 2s, not just layer 3s above that, but it was going to make its way down into the layer 1 protocol. It's going to facilitate bridging systems, etc. So we knew this was an essential long-term bet that we had to make on the research. And so Linea has some advantages over pretty much all the other layer twos in the sense that the proving system, the arithmetization system that we have pioneered is looking like it's going to be the most efficient. There are other approaches using RISC-V and SomETHing technology, and we will likely adopt some of that in addition to what we're doing. But we believe that our ZK EVM implementation is not only the number one ZK EVM out there, it is in pole position to be the dominant ZK virtual machine and Ethereum virtual machine platform for quite a long time. There are debates going on, but we're in great shape to become an important layer two, to be and become an important layer two technology, and also have some of our technology make its way into layer one, reinforcing the idea that Linea is 100% Ethereum compatible.
You know, and another part of this that I feel like we haven't quite said explicitly yet, but something that you also talk about a lot, Joe, which is the idea of trust as a new commodity, which is what all this technology and everything that we're talking about, that is essentially what this is enabling. And that is one of the key transformative properties that I think you're hoping could spread far and wide throughout the global economy. Does that sound right?
Thanks for asking. That's one of my favorite topics.
Mine too. It's why I joined Joe in this
Exactly.
mission.
Yeah, trust is everything. In order to do significant things on planet Earth, you have to gather lots of different kinds of resources, capital, people, etc., and you have to coordinate them. You can't coordinate to achieve big, complicated things without high quality trust. And for millennia, we've coordinated big civilization scale things with top-down command and control trust, which has produced great things in society. But just with the nature of top-down command and control, it usually means that maybe 1% of the people who are in that hierarchy feel like they're really gaining all the benefits, and a high percent, maybe 99%, feel like, hey, something doesn't seem perfectly fair. I don't have full agency, or I'm not getting as much value as I think I should get based on what I've contributed. And so we have this new form of trust invented by Satoshi, decentralized trust, and it's a much stronger form of trust. So we can add this horizontal form of trust to the vertical form of trust, and we can ideally have a stronger social fabric, where we've certainly seen our social fabric under top-down command and control fraying quite significantly with polarization and political systems that are no longer quite up to snuff. And so we have started thinking about trust as a new kind of commodity, a virtual commodity. And we've been thinking about and framing Ethereum technology as trustware. And it has been said that software is going to eat the world. That was said by Mark Andreessen about 25 years ago. Software ate the world. And it was good for the software, and it was good for the big tech companies that built the software. And it was good for the world in many ways. Certain kinds of globalization have been really healthy. But again, maybe 99% of the people are a little off kilter right now because software ate the world. And what we really need is for trustware to now eat all the software that ate the world, and transform our information technology infrastructure into one that is saturated with decentralized trust, formal verification, things like that. And we've been thinking about Ether as the highest octane trust commodity, in the sense that if you use Ether to execute transactions on Ethereum, to forge agreements, maybe even treaties on Ethereum, to set up complex processes, you can be pretty much guaranteed that they are going to complete as advertised. They can be transparent and auditable and formally verifiable. And so we're moving into an information technology infrastructure that is saturated with the highest form of trust. And I believe that is going to reduce expenses for running the economy by orders of magnitude, increase velocity of transactions, of value creation transactions in the economy, possibly by an order of magnitude or two, and essentially compound all the value creation events that we create in an economy into shorter periods of time, and taking advantage of the value of compounding all across the economy. So thank you, Eric, for letting me talk about trust.
Anytime. I always love to hear it. One thing on software eating the world that I think we always miss is that implies that software as a predator in the world is prey, which like that I feel like that needs to be adjusted.
So
Maybe we're doing
software
that.
is machinery. The
Yeah.
people who operate the software can be beneficent. They can have benefits of large communities in mind, or they can be more aligned with the maximizing shareholder value, and there can be negative externalities potentially, like maybe you've built a weapon of mass social manipulation and you've made it available to the highest bidder on your advertising auction system.
Yeah, I definitely believe in the technology as tool narrative as well. Joseph Shalom. So if I understand correctly, you were about at retirement. You were thinking about retiring, or maybe you already had retired, and then you got pulled into this narrative. I think in part by a little bit of the way Joe just framed it. Is that right? And if so, tell me
So
how you let yourself
I had
involved.
spent 20 years at BlackRock helping scale centralized technology businesses, and in the last 5 years run digital assets. So the good news is I did retire in June. I had a glorious 5-week retirement. But the wonderful way to describe it is I didn't get pulled into this mission. I kind of have been on this mission, this idea that digital transformation on a decentralized network is not just going to change civilization. I think it's going to change financial markets. The idea that most financial markets require human trust, and that is through capital and insurance and all sorts of risk paradigms, because you're trading with intermediaries, you have banks involved, you have clearing houses involved. Nothing that trades happens instantaneously. And that's really, really difficult for society, but really good for the centralized intermediary rent takers. So the idea of thinking of Ethereum as a global settlement layer for initially finance is what I've been working at. And this is just a clear exploration of that mission. And Joe and I met earlier this year at a conference. I think we discussed less business, more books. Joe, is that fair?
Sure. Yeah.
Less business, more books. And I think I learned a lot about what Consensus and Joe have been working at for nearly a decade. I think he learned a little bit about what we can do in the ecosystem. So, yes, I came out of retirement just to continue that mission. And I believe very, very strongly that most of financial services, which today operates on a different rail, will start running in parallel on a decentralized settlement layer, which is Ethereum. And over time, these things will converge. But I think what's really interesting and why I'm leading an Ethereum digital asset treasury company is this is going to happen over a number of years, and it's going to be a multi-decade transformation of financial services and society. And if you believe that, then you want to own as much of this trustware as possible. And we're just giving people a different way to get that exposure. But I'm super excited. I'm not a degen. I do come from traditional finance, but I think marrying these two approaches is how this revolution is going to happen. And I think you need both sides to understand one another better. And you need to be really, really focused to not make centralization mistakes on this road. And Joe uses the word decentralized trust, and that has to be the long-term solution. And you look at some of the other chains, which I think are more vendor and corporate and monopolistic. I think in the long run, if you're going to change the rails, you better do it on one that doesn't have vendor lock-in, and that's Ethereum. And I believe very deeply that Ethereum is not only winning, it has a license to win to do this transformation. Others may be glossier, have more marketing, more VCs behind them. But when it comes to trust, security, and liquidity, it's Ethereum's game.
What else do you see on this roadmap towards more in institutional adoption, more programmable finance? What are some of the milestones that you think, like things like, we always talk about like tokenized equity, programmable liquidity? How do you see this progressing going forward?
I mean, I think there are screaming signals in the market right now that there are three things that are going to J curve. The first is just the adoption of stablecoins, which you can think of as the first tokenization. It's just a tokenization of value and money. That is going to probably 10x over the next few years. And then this idea of tokenized securities, whether it be stocks or funds or bonds, there's a reason why they should be owned in a digital format, programmable, instantly settlable, composable, probably geographically and venue no longer constrained. We're in the first inning, probably the bottom of the first inning of that revolution. And we're going to stop talking about things as crypto and digital assets. They're just going to become digital representations of securities. And then this idea that we started with is good DeFi or institutional DeFi. There's a tremendous amount of liquidity in market making and borrowing and lending, and that'll really lend itself to traditional markets. And I think those are the three screaming signals. But when you start hearing the likes of the biggest exchanges and centralized custodians talking about this no longer being a $4 trillion crypto market, and that it's $100 trillion digital asset marketplace, it tells you that they are coming. Our job is to make sure they do it on a trusted, decentralized platform. But it's here, it's now, the signals are screaming, let's go. And we're trying to set a precedent with our Linea announcement that you could do this safely, institutionally, but on fully decentralized, 100% Ethereum compatible code base. So if really, really excited to not only watch this happen, but to help accelerate the adoption.
Yeah, since 2009, when Bitcoin was introduced, there have been floodgates in place designed to keep traditional finance, traditional ways of running countries and doing different forms of governance completely separate from it and protected from decentralized ways of forming trust and collaborating and doing finance and doing different kinds of decision making and governance. The floodgates have been rolling up slowly over the last bunch of months, and now I wouldn't say they're all the way up, but a bunch of us were at an event in Frankfurt a few weeks ago, Swift's Sipos event, and the CEO of Swift announced in his keynote that they would be building the Swift digital ledger. In fact, what he announced was that Consensus would be building it in collaboration with Swift on the Linea technology, and that it will be an important part of the extended Ethereum ecosystem. They indicated that they didn't want to use the word settlement yet because they thought there might be some sort of pushback from some of the major money center hub banks in the correspondent banking ecosystem. But there was pretty broad acceptance and support for what was announced, and they did actually end up using the word settlement. So can anticipate that what we end up building will ultimately settle on Ethereum rails. And sentiment at that conference was remarkable in the sense that it seemed to be universally accepted that, hey, this decentralized protocol technology is maturing. It's got some really great stuff. We need it because we've got some problems, and it presents some great opportunities as well. And so Joseph highlighted a few of those opportunities. And yes, bottom line, the gold rush is on. The integration of, or I kind of think of it as more like an onboarding of various different elements of decentralized finance, whether it's um, stable coins or tokenized bank deposits or digital asset treasuries or real world assets. All of these elements and a lot of the deep expertise from the traditional finance industry is now onboarding itself to a much sounder technology, and it's a sounder technology because it's based on decentralized trust.
I wonder, and I'm curious, especially at Sibos and some of these other gatherings of with TradFi folks. One other aspect that we haven't brought in yet that I think plays into the potential for expanding the total addressable market for Ethereum is AI, and particularly the role that Ethereum and Linea can play in verifiable AI. Is that part of the conversation when you go to a conversation like a conference like Sibos?
There was a fair amount of discussion about AI. At that event, they weren't thinking about AI as operating on decentralized rails so much. They weren't yet. They're just thinking about finance operating on decentralized rails, and so they didn't want to overwhelm them with moving all the machine intelligence onto decentralized rails as well. But in our ecosystem, we're hyper aware of some of the innovations that have been introduced. So X402 is a protocol that will enable micropayments to be made for asking for data, essentially, and asking for something to be done. So if a few agents are collaborating on things, they can start asking each other things and paying each other for tasks done, etc. I anticipate hopefully very soon having a digital twin personal agent ally that coordinates all of my activities across foundational models and across different kinds of expert agents. And I anticipate that the hybrid human-machine economy and the machine-to-machine economy, which can consist of lots of autonomous things that just do work for the benefit of humanity, that will heavily be coordinated by those kinds of micro payments and messaging systems. And closer to home at Consensus, we have participated with the Ethereum Foundation and Google in building ERC 8004. It's a protocol that enables AI agents to be registered, to publish their capabilities, and to enable either humans or other agents to feedback on whether they've been performing their advertised capabilities up to snuff. And so that's going to be a really important element of the hybrid human and machine economy, because it enables discovery of things that will benefit you, and it enables us to build essentially reputation systems around the different machine intelligence capabilities.
And I would just add something, 8004 is important because it tiers trust. And there are things in our lives that take tremendous trust, and there are things in our lives that we build trust based on reputation. And developers in this protocol can choose from a bunch of different trust models. Like, it might just be a simple reputational system using other people's feedback. If you're going to order a pizza, for more complex transactions, you may require some sort of validation via some sort of staking or re-execution. And in other cases, you might need proofs or reliance on hardwired oracles. But the beautiful thing is it allows you to go across organizational boundaries and work across that tiering of trust, which is how trust works in the real world. And so I think it's very exciting. I think if you think about when this is coming, I'd be bullish that all of us will have some portfolio wallet twin that will be able to do micropayments based on reputation and portfolio rebalancing based on some, secured or re-execution or Oracle-based rules. And I think this idea of tiered trust is going to be really, really important as we bring it into our real lives. And Joe, I know I'm geeking out here, but this is really, really important because the rest of the financial ecosystem just expects a certain level of trust, and it doesn't adjust based on what the transaction is and how you're interacting and what your risk tolerance is in the real world. So I think it's super exciting, and I think it's going to be in our daily lives faster rather than sooner rather than later.
Yeah, also, hat tip to one of our colleagues, Marco De Rossi, one of the driving forces between EIP 8004, and also just dropped Agent Zero, which is an 8004 based SDK to make those agents more discoverable. So pretty exciting stuff. And like you said, I think there's tons more to come in that department. You don't want to bring it back to Linea a little bit. A big part of the mission of Linea is driving more value to Ether. But then we do also have this token, Linea itself, as a token. So now, obviously, no investment advice here. But I wonder how you think about the case for grabbing and holding some Linea, which I have done myself, and out of my own hard-earned pocket, as we didn't do an insider distribution. So you really do have to be a believer to hold Linea. So what makes you a believer, Joe, in Linea?
I've always been a believer, and I'm especially excited about the Linea technology ecosystem and the Linea token. So we set up what we believe is a game-changing meta in the token economics of the Linea project. We are putting a lot of effort, long-term effort, into building out a token economy. We've set up the Linea consortium with 85% of all the Linea tokens that will ever be issued or extant. And we are at present evaluating, we're soliciting proposals, we're evaluating a wide variety of projects to give funding to. And it's right from the start, it's been about figuring out how to incentivize builders and liquidity providers and usage by intelligently allocating one of the biggest ecosystem development funds in history. So that work is underway. We've put some capital into different projects. EtherX is an important one, but there are more coming. And if you're excited to figure out what it is to build a sort of next generation civilization, that a lot of that sits at Ethereum layer 1, but a huge amount of how civilization will evolve will be on higher layer technologies that have identity systems and different aspects of financial systems and different aspects of social networking systems, social graphs that you can own and control and monetize yourself. And so a lot of this layer 2 technology is also going to play an important role in sort of necessary differentiation of nation states and the boundaries between nation states. Some nation states won't want to share layer 2 blockchain systems or layer 3 blockchain systems with others. Countries like Switzerland has data laws, and so they're going to have to have their own blockchain systems, maybe at layer 2, maybe at layer 3, that all sit on top of the base trust foundation, so that they can do things that are appropriate to their culture and their system of laws. And so it's a pretty incredible adventure to have these building blocks and to have the opportunity to put mechanism design into place to incentivize the building out of the next, I guess, hybrid human machine economy.
Last year, it's been about a year since the last Dev Connect, Joe, where you talked about Linea as part of a new network state. Are you still thinking about it that way? Has your thinking evolved
Yeah,
at all?
yeah, I think we probably shouldn't be thinking about network states as replacing nation states. I think a lot of them can take over some of the capabilities and functionalities that nation states can provide. But I think network states will be closer in nature to communities and companies than nation states. And I think there'll be hundreds of thousands or millions of network states rather than 200 nation states. And so I think that I will be a citizen or a netizen of many different overlapping network states. I think Linea is a network state. Ethereum is a network state. Consensus itself might have a network state. MetaMask, as it decentralizes itself and tokenizes itself, will have its own network state token economy. And so it's just a very a cool, more granular, more effective way of identifying needs and opportunities and addressing them in a way that's appropriate for all the different stakeholders in a situation.
Joseph Shalom, I'm curious how you feel like this particular narrative, kind of the network state, the big vision of it all. How do you feel like that lands with folks in TradFi? I feel like I've seen it kind of go up and down over the last couple of years, but you're here. It drew you in.
Yeah, I think traditional finance understands that the underpinning of market structure is going to fundamentally change. I think they understand it's going to be more digitized and real time in nature. I think financial institutions are starting to understand the idea of decentralization. Just remember, their entire ethos has been centralization. So once you get your head around the fact that most economic transactions are going to happen instantaneously on digital form, you realize that the millions of databases that exist in finance are no longer, it's not that they're no longer relevant, they just can't support that mission of instant programmable settlement. And so I think they're trying to get their heads around this idea that there's going to be a new paradigm. They're getting their heads around it's based on decentralized standards and trusts. I think they're trying to understand what DeFi is. And I think it's going to happen slowly and then really, really fast. And I think the slowly part is behind us. We've been through the regulatory change. We've been through some of the cleansing of standards in the industry. And I think at this point, many of them have this FOMO that they haven't had for years. But I think it's going to really, really happen not just in years, but it's going to be a multi-decade opportunity. And lots of people speak about these opportunities as trades. It's not a trade, it's a fundamental rewiring of how value and money are being moved. I think the decentralized piece and the trust piece will have to get learned. And I think the number one learning is when they try to re-centralize it through closed systems and monopolistic chains, they're going to recognize they're just recreating the old paradigm, and that won't happen. And that's why, like, we're very, very excited about our first Linea announcement, because it sets a new standard and tells people that big traditional public company institutions can embrace this while not sacrificing risk management. And to your point, I think both sides, traditional finance and decentralized finance, are learning about one another, but the convergence is happening right now. And so I'm super excited to set these standards along with Joe, because you need people to be out there and to really just publicize that you don't have to compromise. But it is about teaching and learning and setting case studies and letting people copy you and repeat you. And that's a great thing.
Yeah, and it's important to point out that the reason we are able to achieve a really impressive risk-adjusted yield is because Sharplink and Consensus have been working really closely together with our Linea friends and colleagues to do something that can't really be done except by bringing together all these deeply entrenched groups.
Yeah. And it's not easy, but it's worth it. It's really worth it because our investors are going to get a different profile of returns. It's just not easy to pull together, but it's a definition of what's composable. You've got 5 parties coming together to create a better widget for investors. That's composability defined.
Those are some high value Lego blocks right there, is what they are. Well, so this brings me to the question that many people have been watching, hoping I probably would have asked at the very beginning, but will this be the last Sharplink deployment on Linea, or the first?
The first of many, and the first of many creative deployments. And to be honest with you, I get the question sometimes, can other people replicate it or not? And most of the time, the answer should be no, 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 we want to keep it to ourselves. We want people to rinse and repeat, including our competitors, because standards are set not by one party. Standards are set when people rinse and repeat it over and over. So I welcome others to do exactly what we did on Linea. And then we'll stay one step ahead through creative partnerships.
Awesome. One final question, and appreciate very much both your time today. One prediction, maybe from both of you. What does the institutional DeFi landscape look like a year from now, and where does Linea fit in that picture?
I think if we can do a better job in Washington to get that final piece of regulatory clarity done in the form of the Clarity Act will be really, really important. And then second is we have to figure out digital identity, because it can't be the last pole in the tent for institutions to be able to interact with DeFi. And I think you'll hopefully have a breakthrough or two there, both on the regulatory front and how people can identify themselves on chain while at the same time keeping decentralization at our core. Those are the 2 things I'm looking for to accelerate adoption.
My not so bashful prediction is that Linea, Ethereum, and MetaMask technology will have a significant role in the banking infrastructure on the planet through our work with Swift. And on the security side, in particular equities, there will be not just through smaller organizations tokenizing special purpose vehicle pools of equities, but the biggies are going to be tokenizing equity natively and enabling equity to move from traditional form to tokenized form and back. So I think by 12 months from now, we're going to see real movement towards the next generation global financial system.
Excellent. Awesome. Well, thank you once again for the always bullish conversation, Joseph Lubin, Joseph Shalom. Really appreciate the time today. that is it for the SomEThing podcast until tomorrow, when I'll be back early to talk with Declan Fox and with Linea OG from our community, and with Arthur Remy from our product team. Lots more to talk about tomorrow. Thanks again to both of you. Thanks to the third Joe, the invisible Joe Nolan.
Thanks, Joe
behind
Nolan.
the controls. And everyone else.
Thanks, gents.
Probably something.
Thanks.
Thanks, everyone.